Tax rate. This article establishes the standard tax rate applicable to supplies and imports under the UAE tax system, as governed by the Decree Law. The detailed provisions governing the tax rate are explained below. 1. Standard rate of tax applicable to supplies and imports. The standard tax rate applicable in the United Arab Emirates, UAE, shall be set at 5%, 5%. B. This standard rate applies unless a different rate, including zero rating or exemption, is expressly provided under other articles of the Decree Law or the Executive Regulation. C. The rate of 5% applies equally to both taxable supplies made within the UAE by a taxable person. Imports of concerned goods into the UAE, subject to customs clearance and compliance requirements. 2. Reference to relevant provisions. Title 6. The application of the standard 5% tax rate is subject to the provisions outlined in Title 6 of the Decree Law, which covers the calculation of tax. Any potential adjustments, special rates, or exemptions that may apply in specific cases. B. Title 6 may also elaborate on specific valuation rules. Circumstances where special relief applies. Any conditions under which a supply or import might be taxed at a different rate, including zero rating or exemption. 3. Application to supplies. Domestic transactions within the UAE. The 5% tax rate applies to the value of each taxable supply made within the UAE. B. Taxable supplies subject to the 5% rate include sale of goods, provision of services, leasing or licensing arrangements. Any other supplies classified as taxable under Article 2 of this Decree Law. C. Tax must be calculated on the value of the supply, determined in accordance with valuation rules set out in the Decree Law, which may include consideration received in money or kind, fair market value if applicable. 4. Application to imports. Cross-border movement of goods into the UAE. The 5% tax rate shall also apply to the value of each import transaction unless an exemption or zero rating applies under special provisions. B. This includes the importation of consumer goods, raw materials, equipment and machinery. Any other goods classified as taxable under Article 2. C. The value of the import shall be determined in accordance with customs valuation rules, which typically include the customs value of the goods, any applicable customs duties, freight charges, insurance, and other related costs incurred up to the point of entry into the UAE. 5. Calculation of tax payable. The amount of tax due on any taxable supply or import shall be calculated by applying the 5% tax rate to the taxable value of the supply or import. B. The taxable value must be determined based on the actual consideration received, or the fair market value if the supply occurs between related parties or in other situations where the consideration is not monetary or not reflective of market value. C. Taxable persons are required to maintain clear and complete records that demonstrate the correct calculation of taxable value and tax due. 6. Legal authority and interpretation. A. This article forms part of the mandatory provisions governing the UAE tax system and must be applied in conjunction with all related provisions under this Decree Law. B. In case of ambiguity or need for interpretation, Federal Tax Authority (FTA) guidance and the Executive Regulation shall provide additional clarifications and procedures. C. Any failure to apply the correct tax rate may result in penalties, corrective actions, or reassessments by the FTA. 7. Exceptions and special cases. A. While the standard rate is 5%, certain supplies and imports may qualify for a zero rate, where tax applies at a rate of 0%, but input tax can still be recovered. Exemption, where no tax applies, and input tax recovery is restricted. B. Supplies that may qualify for zero rating or exemption are covered in specific articles within this decree law, especially those related to international transport, exports, and essential services. 8. Importance of correct rate application by taxable persons. A. Every taxable person must ensure that the correct tax rate is applied to each transaction. B. Tax invoices issued must clearly state the applicable tax rate, the amount of tax charged, the taxable value on which the tax is calculated. C. Errors in applying the tax rate may result in additional assessments by the FTA, financial penalties, disruption to business operations. For more details, contact us.